Good morning, good afternoon, good evening, wherever you are in the world. I'm Nicolas Veron at the Peterson Institute, and it's my delight to introduce this new session of the Financial Statement Series at the Institute. Today, we'll discuss European banking supervision, also known as the Single Supervisory Mechanism, part of the Banking Union project. We did have a discussion about that in November 2020, bit more than a year ago, with Andrea Enria, who is the chair of the supervisory board of the ECB, so the top official of the system. So it was very much a vision from the top down about the first 6 years of operation of European banking supervision. And today we want to complement that by having a bit of the same discussion, but from the bottom up. And that's why our first speaker will be Kilvar Kessler, who is chairman of the board of the Estonian Financial Supervision Authority, also known as Finantsinspektsioon. He studied law at University of Tartu, then at Georgetown in the US, graduated there in 1997, and he was in private practice in Estonia, first between 1995 and 2002, then again in the later 2000s. He has also had a number of academic affiliations. He was a Hubert Humphrey Fellow at Boston University in the mid-2000s. Also a lecturer at the Tallinn University of Technology in 2007. But most importantly for our purposes, he joined the Financial Supervision Authority, the FSA, in 2002, stayed there until 2005, and then again from 2008 to now. And he became the chairman of the authority in 2014. It's worth mentioning that Kilvar has also worked at the Boston office of the US Securities and Exchange Commission in the 2000s. So he has familiarity with the US system, particularly of securities enforcement, but with read across to the issues we will discuss today. And he also was, when he was a lawyer, a board member of the Tallinn Stock Exchange around 2000. Jonathan Zeitlin is now at University of Amsterdam. He studied at Harvard College and got his PhD in social history at the University of Warwick in 1981 in the United Kingdom. He was then a member of the faculty in various academic institutions at King's College, Cambridge, from 1980 to 1984, at University of London, the Birkbeck College, from 84 to 91. At University of Wisconsin-Madison from 1991 to 2010, and since 2010 at University of Amsterdam, where he's now professor of public policy and governance. And I should also mention that Jonathan Zeitlin is the academic director of the Amsterdam Center of European Studies. That's, I think, the acronym behind you, Jonathan, ACES. Jonathan has had numerous visiting positions at EATSS, École des Hautes Études en Sciences Sociales in Paris, at the University of Tokyo, at the European University Institute in Florence, at the University of New South Wales in Sydney, at Copenhagen Business School, at Brown University of Rhode Island, and I'm probably forgetting many of them. He has also consulted extensively with particularly the European institutions, European Commission, European Parliament, and has done a lot of on-the-floor work, if I can put it that way, on particularly the ECB and the European banking supervision system, which is why we're having this discussion today. With this, over to you, Kilvar, for your introductory remarks.
Thank you, Nicholas. It's great to be here, and I should keep my presentation within 10 minutes, so I will do my best, but please do not count the technical hiccups to this 10-minute time frame. So I will share my screen to you, and let's see how it goes. I hope you can see it.
Perfect.
Okay, wonderful. So, I mean, the heading of the presentation, it should be catchy. So I try to phrase it in a catchy way. Either it's stellar performance or total failure, the European Single Supervisory Mechanism. We will figure out it during today's panel. But let me start off, what are the topics I will be discussing very briefly. 3 topics. First, did the creation of SSM shift the banking supervision paradigm in Estonia and in the Baltics, Estonia being one of the Baltic states. Second, what are the strengths and weaknesses of SSM and how SSM might develop in coming years. So to create some context to my thoughts, first some words about the Estonian banking market and also about the EU banking supervisory model prior to SSM. So Estonia has been a euro area country since 2011. Our banks currently have total assets of 47 billion euros. So not that large, not the smallest, but not the largest of European banking markets. 2 of the 4 largest institutions are subsidiaries of Swedish banks, Swedbank with 32% market share and SEB with 15% of the market. And these Swedish banks also have large subsidiaries in the other Baltic states. And Sweden, let me remind you, is not a member of a euro area. Then we have Luminor in Estonia, a bank founded from the Baltic subsidiaries of Nordea of Finland and DNB of Norway. Luminor has also presence in the Baltic states, but its headquarters are in Estonia. Blackstone of the US manages Luminor's broad shareholder base, and Luminor has a market share in Estonia of around 31%. The 4th largest bank in Estonia is LHV Bank. It's locally owned credit institution with 14% of market share, and the bank shares are listed on the Tallinn Stock Exchange. So the key indicators or statistics of Estonian banking market, you can see pretty good capital ratio, quite low NPL level in comparison to euro area. You see Estonia is green and the Eurozone is blue or lilac. Return on assets, you can see it's remarkable, at least in Eurozone terms. And also cost income ratio is, I would say, bearable. So it's around 50%, it's 48.8. So the organization seemed to be pretty efficiently managed. So those are the key indicators of Estonian banking. Now moving next to the slide 4. So before the SSM was launched, the EU banking supervisory model was as follows, and it still is like that outside the euro area. The home member state, which in simple terms is the country where the parent bank is headquartered, was responsible for supervising each banking group on a consolidated basis, and also then the parent bank at the solo level, basically. The home member state took care of that. The host member states are those where the subsidiary banks of the parent operate, and the host was responsible for supervising those subsidiaries at the solo level. In addition to this, the home country had to invite the host countries to a thing called supervisory college. In the supervisory college, all the important issues about the group and its subsidiaries were discussed and could be and should be discussed. The home supervisor had the final word in the college, but if there was a disagreement, the host could file a complaint with the European Banking Authority, which then decided the case by considering, quote and unquote, the European interests. So Eastern European countries have tended to be host countries, and Western European countries have tended to be home countries. Or maybe it is that the smaller countries are the host countries and larger member states are home countries. You can in a way distinguish both ways. Now the shift in paradigm. SSM was formally created 4th of November 2014, so it's up and running already more than 7 years. And the shift in paradigm, as I see it, was the following. Basically 3 points I have to make here. The SSM exercises direct supervision over large institutions, in European legalese known as SIs, significant institutions, of which there are at least 3 in each euro area member state. The SSM also has the power to take over supervision of individual smaller banks called LSIs, less significant institutions, and exercises also supervision over all the banks in euro area at the policy level, to say the least. Under this system, the three largest institutions in Estonia, which are Swedbank, SEB, and Luminor Solo, fall under direct supervision of Frankfurt. This means 78% of Estonian banking is supervised directly by the ECB and the SSM. And it is like that. Of course, the percentages are different or might be different. It is like that in all euro area countries. Second, the ECB takes decisions about SIs or significant institutions. More exactly, all decisions about prudential supervision, for example, Pillar 2, fit and proper, decides stress testing, administrative measures, you name it. The ECB also decides centrally about all banking licenses and all qualifying holdings in banks. And this is not about only SIs, but once again, all the banks in Eurozone. In addition to that, at least for SIs, SSM has created and adopted central planning policies and methodologies, and the ECB and SSM have a special body to take these decisions, which is supervisory board of the ECB, consisting high-ranking supervisory officials from the member states plus ECB members. And among the ECB members is then Andre Enria, the chair of SSM. So for the prudential supervision of banks, the center of gravity has moved from Tallinn, Riga, Rome, Paris to Frankfurt, as from 4th of November 2014. Third, the ECB has replaced the member states in the SI or significant institution colleges. In addition to that, SSM has created a joint supervisory team system. It is a new format for on-the-ground supervision or daily supervision, and the ECB leads the JSTs and exercises the centrally created supervisory policies and methodologies of the ECB through these JSTs. So all in all, the ECB is a voting member in Swedish colleges. You remember we had two largest banks roots in Sweden, so ECB is a voting member in Swedish colleges, and Estonia there is a non-voting member. And second, our resources are pooled together at the JST with those of other Baltic colleagues. Even though strictly in legal and technical terms, we should have three or two different JSTs, but we have joined our forces there, Estonians and other Balts, together with ECB. So overall, the ECB as a center of SSM has taken a broad view of euro area banking as a whole. Nobody has taken it earlier. So strengths and weaknesses of SSM, I have enumerated these as well. Independence from direct local influence, and SSM has negotiating power against large institutions. And maybe in case of Estonia, it's very important, not that we had direct local influence over our banking system, but we had Swedish influence. And now somehow the SSM evens it a little bit more than the small Estonia was able to do earlier. Of course, SSM has enough intellectual and staff capacity to produce quite complex methodologies and policies within very short time frame. I mean, for smaller NCA, it's quite difficult task, not to say that it would be impossible within very brief or short time frame. And also strengths, I consider it as a strength, is a kind of common culture. Basically, we try to kind of cross-fertilize, take from each other the best practices, what we can, what we can see the other colleagues are doing in other member states. Weaknesses, of course, SSM faces policy constraint. You have one policy and then you try to squeeze all possible cases to this policy or keep within the frames of this policy, and sometimes it's kind of problem for special cases. Also, signaling is weak, at least for my eyes. Maybe it works in some countries, but in other countries you need quite strong signals from supervisor to get the message through to the industry. More red tape, which is understandable in a way, but it is still weakness. Understandable because organization is way larger. Employees have lower level of risk appetite. I mean, they have their own kind of responsibilities and they don't want to think out of box. I mean, they are not that connected to the local society, I would say, and this could be also work as a weakness. And third one, SSM is a slow mover, definitely. I mean, you have innovations and prior, I mean, the smaller maybe markets are more, how to say, quicker here as opposed to the large organization. Indeed, SSM is one. Now, opportunities to be seized, and that's my last slide of merit and policies to be clarified for me. And this is this kind of small NCA view, what I'm representing, host NCA view. I mean, SSM should think about local centers of excellence. And let me give you an example. I mean, the Baltic states, Finland, and also Netherlands, they are the most digitalized banking markets in Eurozone, at least. I would dare to say even the European Union. And we have some quite established practices how to handle the digitalization and digital service offering, etc., etc. So basically, why not to build upon of this know-how pool? This is something to consider for SSM as an organization. Second, test beds are needed for further harmonization. I still see that there are some kind of national biases within the SSM, and I can talk about this later as well, how we have addressed this in the Baltics and within the framework of JSTs. Then digitalization, of course, supervisory processes, digitalization of this. I think that's a lot of work to do within the SSM. Management of pan-European crises. This is something what we are really worried, I mean, because the framework seems to be utterly complex. And then another story there is that if the pan-European crisis is here, I mean, how the SSM will treat smaller markets, so to say, I mean, of less importance, so to say. I mean, do we have enough power then locally to handle ourselves those crises? And then, of course, the question where the European banking is heading to. I mean, what is the role in the economy overall? What is the role of the banking supervisor there? This remains a little bit unclear to me, and I think to maybe some other people as well. So, and then there are some things more, but I think time is over. So let me conclude that during the first 7 years of operation, I think SSM has met at least Estonia's expectations all in all. But I will promise I will continue kind of voicing things what we see as unreasonable, and also addressing shortcomings. Of course, this is not the best job in the world, but we want to be there and voice out that the kind of European project will be successful. So that's it from my side for starters.
That's great. Jonathan.
Yeah, thank you very much. Very interesting presentation, Kilvar. So I've been asked to speak for 5 minutes, and I'll just say a few things, actually, mostly about the strengths of the SSM. I can come back to some of the weaknesses later. So I think the first thing I would say is that it is a really remarkable achievement that in a very, very short period of time, the SSM was really able to put together an integrated Eurozone-wide system of banking supervision, bringing together banking markets and supervisory authorities with very different traditions, and to develop, as Kilvar said, methodologies and procedures which are common and which can be applied to, first of all, to large significant institutions, but also with appropriate modifications to smaller banks that are still in the first instance supervised by the national competent authorities. And it's been able to do that basically without any major glitches. I mean, there have been no major banking failures, banking crises within the ambit of the single supervisory mechanism that at least could be attributed to failures of the way the system has worked. And I would say that it is now the largest banking supervisor in the world, is the most diverse banking supervisor in the world. And it is really able to combine bank-specific supervision with a European-wide comparative perspective on the performance of different banks, and to use that to adapt, let's say, general rules, procedures, metrics to the situation of specific banks in many ways. It's been able to break up the historic ties between banking supervisors, banks, and national ministries of finance. That's something also Kilvar has mentioned. And in doing that, it's developed some very distinctive original institutions, the joint supervisory teams, which bring together European and national officials for supervising the large banks. That would be one. The extensive on-site missions that delve deeply into particular risk issues within these banks and inform the work of the JSTs, and also the supervisory review and evaluation process decisions about capital requirements for banks. There is also quite a distinctive process of second line of defense or supervisory quality assurance that the SSM has developed. So let me just say two more things for now. One is that I think that this specific combination, and we can talk about how it works, how it brings together a European-wide or Eurozone-wide perspective and deeper knowledge about individual banks and national markets, has been able, I think, to do perhaps more than any other banking supervisor that I know in terms of reducing the information asymmetry between banks and supervisors. And a good example of this is the targeted review of banks' internal models that the SSM conducted, and which led to, for the 65 big banks that they looked at, it led to an increase in risk-weighted assets by about 12%, with equivalent knock-on effects for capital requirements. And so maybe I can just conclude by saying that the fact that the SSM, through this combination of in-depth, intrusive hands-on supervision of individual banks and benchmarking and comparison across banks, is able to reduce this information asymmetry. It looks to me like this has also been very helpful in dealing with the pandemic, and has made it possible to relax some of the rules on capital buffers and accounting and so on for the banks, while at the same time keeping a good grip on provision for loans that may be going bad, and making the whole thing more transparent, both internally and externally, than it otherwise would be. So I will stop there for now. There's much more that could be said.
Jonathan, I think it's fair to say you focused on the positives. You said that in introduction of your remarks. What about the weaknesses? What about things that could be improved from your experience? You conducted a lot of interviews, of course, confidential interviews, but you really have a feeling for how the system works from the bottom up. So if you had to tell the ECB what they should do better, what would you tell them?
Well, I mean, part of the issue, we can talk about two types of weaknesses. One are the external weaknesses. I mean, the limits of the ECB or the SSM's own powers, the continuing national options and discretions, for example, about liquidity waivers for, within large banking groups. So that has meant that also the absence of European deposit insurance system. So if one of the purposes of the SSM was to increase integration of banking in the Eurozone or within the banking union, that has not happened to the extent that was desired. In fact, the level of integration is on some measures lower than it was before the Euro crisis. But that is not the SSM's fault. That has to do with the framework within there, which they're operating. And Andrea and Ria has some quite creative suggestions for workarounds of various kinds to improve that. Now, I think that the other issue would be the one that Kilvar brought up, which is that it is a large, complex institution. On some dimensions, it inevitably works slowly. I think in some respects that is a strength, because it does give the national supervisors, the national competent authorities, a voice in the decisions and in the methodologies and processes of the SSM. But that is inevitably, also slows things down. And you can hear people at the top of the SSM complain about that. They would like it to work in a more seamlessly integrated way. And I think the idea that Kilvar suggested of having centers of excellence which could develop initiatives is a good one. And I think it would actually push on an open door in Frankfurt, because I've heard Andrea and Ria say some quite similar things. So thinking creatively how to get beyond the somewhat heavy processes of intra-organizational decision making would be a key thing to think about.
Kilvar, Jonathan mentioned the so-called TRIMS, the targeted review of internal models, as one of the achievements of the SSM, the single supervisory mechanism. Can you tell us more about the experience of TRIM and whether there are any broader lessons? Well, first the assessment, of course, and also any broader lessons from that process?
Yeah, thank you. It's a quite specific question, but I'm happy to answer. I mean, I remember very clearly when the project started. I think it was back then president of ECB who had the initiative that we should carry it out, and that to have some kind of comparison moment all over the Eurozone, because we have lots of models and there is a huge, or potential was that there was a huge heterogeneity there what comes to the models. And just a remark, in Estonian banking, Swedbank and EEBA are both using models. So in a way, it was also relevant for us. And I remember when the project started, I mean, the numbers, how many experts do we need and how long the project would be, those numbers were totally out of blue. I mean, huge numbers of people, years and years this project would take. But all in all, I think if I'm looking at the results of this, I mean, it was very helpful for us from Estonian perspective. Why? Because we could, in a way, benchmark the models what our Swedish banks are using. And also it was of value to our Swedish friends as well, because they could also benchmark themselves in European scene, so to say. So what comes to the benchmark, yes, indeed. I mean, the exercise was quite good. I'm not that able to measure whether whether this was cost-efficient exercise or not. I mean, but the outcomes we indeed enjoyed, and due to the circumstances I was referring.
I can pick it up from what you just said about cost efficiency. Of course, the implications of supervision are about financial stability, and that has huge consequences, and therefore there is no case for penny pinching. But still, I mean, the cost of supervision is a factor. It's paid for by the industry, and it has to be effective. Is your impression that the introduction of the SSM has increased the cost efficiency of the system, has decreased it, or it's difficult to say? What's your general kind of holistic assessment of that?
Yeah, it's a very tricky question. I mean, it boils down what is the value added offered by SSM, and once again, I think based on gut feeling, the value added is there. I mean, you have the overall Eurozone picture, kind of holistic picture of banking market, and you can, in a way, based on your future activities on that. Now, what comes to the and basically, I'm referring to kind of overall understanding, not necessarily my own views, but the understanding in Estonia. Indeed, the cost level has increased. It did not. I mean, somebody, when the SSM, I was participant in the working group also when the SSM was built up, so to say, or created, and then one of the topics there was that how come we can hire in very short time frames such a number of supervisors, from where they are coming? So they are coming from member states, but indeed, I mean, if we're hiring them to the center, where, I mean, they are going to sit. I mean, and my kind of joke there was that let's buy a huge tent from Bundeswehr, and then they will be sitting there. And this was the basis how the JSTs were born, the joint supervisory teams, because somebody has to do the work on the ground, so to say. And so basically, our costs, they remain the same. They even increased because, as I was referring to, we have excess reporting in a way compared to the old days, and that's understandable because the organization needs the input to create policies and to understand what's going on in the organization. But the red tape, I mean, this is, you can translate into euros as well. So basically, in that sense, it has increased the cost of supervision from Estonian angle. But once again, I think we feel some value added as well. I mean, methodologies, know-how, negotiating power.
Jonathan, do you have a view on this aspect of cost effectiveness of the system?
I mean, as Kilvar said, it's hard to assess. I mean, first of all, you want to achieve a higher level of stability, of what the ECB calls intrusive hands-on supervision. So you can't really compare the prior situation to the present one and say, well, is it more cost effective, because you're also trying to do much more than was done before. I mean, I think something that is quite worth keeping in mind is actually the relatively small number of people who are working directly in Frankfurt. I mean, I think there's now something like 1,200 people, and that's not going to increase, as I understand it, in the future. And the whole thing works, I mean, like a lot of European regulatory institutions, because they also draw on the much larger regulatory supervisory resources of the participating member states. And if you think about the on-site supervision, there's something like 70 people in that division in Frankfurt, and there are probably 10 times more in the various national competent authorities who are helping to do the work. So it's much less centralized than talking about the ECB would lead you to think.
If I may comment,
waving your hand.
Yeah, if I may comment, I mean, I think Jonathan was saying or referring to intrusive supervision, but let me throw in our view on that. I mean, for us at the beginning, at least, I mean, the people at Frankfurt looked at the numbers and said, oh, well, your market is so well, doing so well, the risks are not there. We will drop you, basically. We do zero supervisory activities. And we were a little bit confused because we were worried that, if you leave market alone, soon the numbers will not be so good. So in a way, we had to work to convince our Frankfurt friends that, we have to continue at least with the same pace what is used to in Tallinn, and I hope also in Riga and Vilnius. So this was one thing, or what comes to intrusiveness. And again, the cultures of supervision were different, at least from the starting point. And second thing is somehow back to that and toward intrusiveness. I mean, for us, and it is still for us a little bit, how to say, puzzling that the supervision, the output of supervision is not legal instrument. The output of supervision is dialogue, what we are calling supervisory dialogue, letters to banks, etc., etc. It was something what we are not that used to in Estonia. Now we are used to. But back then, I mean, in our case, it's only legal instruments. You produce precepts, you know, you produce fines, and this what works. That's what makes change. If you send just a nice letter that, oh, please be so nice and kind, nobody really, no, nobody is maybe too harsh, but some of the participants don't care about those letters. So we are used to more very, how to say, tough supervision, so to say, and we are pretty happy. We are seeing that, you know, the center is gearing up as well, and therefore we are very, I would say, we have an urge to resolve the potential problems what we have Eurozone in more active way, but maybe it's not that wise. You know, time will tell.
You referred, Kilvar, in your initial remarks to the fact that there still are national biases within the SSM. Can you expand on that?
Sure. I mean, I'm not going into detail. I will give you some example. I mean, maybe the national bias was too kind of a strict word, but I will give you an example, and then I understand what I mean. I mean, the JSTs are working as follows. I mean, they are still bank-based, and bank is supervisor-based, national supervisor-based. Of course, JSTs are managed by ECB, and some stuff is coming also from ECB to participate in the JST. But still, very many people in the JST are coming from this member state where the bank is operational. Now, how we handled this issue in the Baltic states, and we have in a way lucky situation here, We have foreign banks, so to say. We have Swedish banks. So we have a little bit less national interest. And I think we were first in within ECB system or SSM system where we have not member state based workflows, but we have risk-based workflows. For example, I mean, Estonians are responsible for credit risk in the bank XYZ operational in the Baltic, in all pre-Baltic states. You know, Latvians are responsible for market risk in the XYZ banking group operational in the Baltic states. So we a little bit mixed it up with the SSM and the center, and I hope to see this type of development in other Eurozone member states as well. I mean, why not? And again, it boils down to competence centers. I mean,
there's a question from Pierre Raffi in the Q&A, and by the way, I encourage the audience to ask questions. It's always better when there are questions from the audience compared to mine. What feedback do you get from the industry? Are the banks happy about the change of system 7 years ago? Are they generally not happy? What do they say? Kil.
Yeah, thank you. It started, I mean, you know, it started off that the industry was very, how to say, cautious, so to say. You know, nobody knows what will come from Frankfurt, and since we were quite tough with Swedes earlier, so there were some hopes that, you know, it will be more lax. I mean, or relax the supervision. But you never know. I mean, maybe they are very bureaucratical there in Frankfurt, but then the industry got over it. I mean, they saw that Frankfurt is not that bureaucratical. I mean, they are human beings like we are, and they understand the banking business. So then the kind of pendulum went to the other side, where some banks said, who were LSIs, they said, you know, we want to become SIs because then we can raise cheaper capital, because, you know, markets have priced the SSM in a positive way, and capital would be cheaper for us. But the recent development is that, you know, this honeymoon is nowadays over. You know, the smaller banks see some downsides also in SSM, and namely that sometimes SSM brings certain type of culture. Let me explain on that. It seems, for example, that SSM and the bank governance, the SSM takes pretty legalistic and strict view there. I mean, you know, you have to have your minutes in place, etc., etc. And this has not necessarily been the way how, for example, Swedish banks are operating. I mean, they have less documentation. However, we can see that NPL level is very small. I mean, they have done something right then, I mean, even without documentation. And then I see that the SSM is building more on this formal side of the supervision. More, I wouldn't say that it's overly formalistic, no, not at all, but it's more than, for example, Sweden or the rest of the Baltic banks have used to that. So in a way, it's so-so. I mean, it started very cautiously, then it was a kind of honeymoon stage, and now it's realism, I would say.
Jonathan, how do you look at this issue? Have you interviewed bankers? Of course, the role of supervision is not to make bankers happy, but still, there is an important feedback to be listened to here. How do you look at that?
Yeah, well, I have to say that that is a gap in my own research, that I did not interview bankers, but of course I follow the discussions quite closely. I mean, it's interesting. There was one big conflict, if you like, between European banking organizations and the SSM, and this was over the guidance issued for non-performing loans in 2017. And that was felt to go beyond the powers of the ECB in terms of requiring across the board provisioning for NPLs. And what happened as a result? The result was that the Capital Requirements Directive was amended, and the NPL backstop was put into the regulation as opposed to in the guidance. So in the end, the result was very similar, except that if the SSM wants to ask banks to hold more capital in terms of provisioning against NPLs, they have to do so on a very specific bank-by-bank basis. So they can't so much make rules as apply the rules in a justified way to the individual bank. Another area where I read in the press and also in the statements of people from the SSM supervisory board where there is a tension with some banks is in terms of the standards for leverage loans and interaction more broadly with the shadow banking system. And there have been some conflicts, particularly with Deutsche Bank in this area. And I see the leadership of the SSM saying that they want to look again. They want the EBA, the European Banking Authority, to look again at the guidance on standards for this kind of lending, and they want to, interrogate banks quite closely about the risks that they may be running here. But I mean, I think as a European taxpayer, I'm happy that they're doing that, because worries about risks building up in the shadow banking system are one of the things that analysts have been talking most about in recent years.
So there's another question, Kilvar, from Pierre Raffi, who is precisely asking about this division of labor between the ECB as a supervisor and the EBA as the European Banking Authority, which used to be in London, is now in Paris. And also he mentions the European Systemic Risk Board, which is hosted by the ECB, but a separate institution. Do we still need, post-Brexit, we still need all these separate institutions? Should they all be merged? That's a question from Pierre.
Now I can be only very, private in my answer. I mean, like as a background, I'm a lawyer, and then the basic agreements of the EU said that, there should be national currencies. There should be only euro. So that would be my answer to whether we need the other institutions except SSM, and because SSM is the Eurozone banking supervisor. So EBA, in a way, I would say for me at least, has a kind of a decreasing role. But if I'm speaking in real terms, I think EBA role is also important. I mean, the matter of fact is that not all the member states have the euro as their legal tender and currency. So basically, we need EBA as a rule maker. And in a way, it's a good forum where to understand what's going on also outside of Eurozone. Because, once again, I mean, Sweden, Scandinavia is outside of Eurozone, very important for the Baltic states economy-wise as well. So I wouldn't say that EBA is unnecessary, but in, so to say, in European ideal world, I would say that there will be only SSM and SRM, and that's it. But in reality, I think we need also EBA.
And of course, one recent development is that there are member states that are going to join the Eurozone in the next few years, starting with Croatia and Bulgaria. And we had a session recently with Boris Vucic, the governor of the Central Bank of Croatia, on exactly that process. I cannot help asking you, Kilvar, also about the episode of Danske Bank and its Estonian activities, because that has been prominent in the news. Of course, an issue of anti-money laundering supervision, and actually money laundering, apparently. Now, Denmark, of course, is outside of the Eurozone, but can you give us any sense of how that episode dovetails with your observations on the SSM, and whether the SSM has been helpful in that episode, has been unhelpful, or whether there was no interaction at all? And also maybe remind us of the basics of what happened without being long.
Yeah, thank you. Great question, and it's a pleasure to answer. I mean, I became a chairman in 2014, and beginning of 2014, and you know, prior to that, there were a meeting or a number of meetings where the how to say, the higher ranking officials of national authorities were present, and also during the, you know, the supervisory board meetings, we are getting together and we are discussing things. And in 2014, when I became a chairman, you know, I got along quite well with my Latvian colleague back then, chairman of Latvian authority, and Latvians had very many small banks who were in the non-resident business, so to say. And then I asked from my friend that, what do you think about Estonia, that how the things are here? And he was saying that from my Latvian angle of view, you have one very big player, which is Danske Bank, and you should address it. And this kind of confirmed the background information what we had already in 2013, and then prior to that, that Danske is a kind of bad apple. So in a way, this was for me kind of moment of truth when I was telling to my colleagues that, you know, let's take it down, Danske branch in Estonia. And you know, we made 2 on-sites, and 2015 we made a precept that, you know, you should close your non-resident business, and the end of 2015 the non-resident business, you know, everybody is talking nowadays, was closed. And then there were like 2 or 3 years silence, and then everything, you know, kind of blew up in the public media, but it was already resolved then. And in a way, SSM was the direct helper of this bringing, you know, different supervisors together. I'm not referring to our Danish friends. And later, I mean, in 2018, and it was already kind of, you know, it was not serious anymore. In a way, we had already mitigated this risk, or actually closed, in essence, in business-wise, we had closed down the branch. And then, since Danes were very difficult, we had to show our muscles, and then we kind of formally also closed down this branch to get to deliver the message, so to say. And after that, we have very good relations with, without any irony, I'm sincere, with our Danish colleagues. Seriously, I mean, we learned our lesson that it was not right way prior to 2014 how to handle, you know, together things. I mean, and there I could really see the national interest kicking in, but it's a longer story. We can have another panel on that. I mean, and I'm more than happy to discuss in great detail that.
We'll do them. I have a series of questions from on the broader policy framework. Jonathan, you mentioned in your remarks the external environment that constrains the SSM and the unfinished nature of banking union. So Nishadi Tenakun, is asking what's the progress of the EU resolution regime. Christopher Spink is asking what progress do you anticipate on the common deposit insurance scheme? Will this ever be done? What about the green common securitization rules, pan-European? Matthew Walter Speiler, asks, given the success of the SSM that you highlighted, has not there been more progress on other parts of the banking union? And also, Kelly Jordan is asking if there are implications for the capital markets union. So, of course, this session is not about all these topics. They're, in a way, out in the hands of the legislators. But what is your perspective on the lessons that should be learned from the experience of the SSM so far to possibly unlock these issues, which, as we all know, are pretty much stuck right now? Maybe starting with Jonathan and then Kilvar.
Yeah, I mean, it is quite difficult. I do think that it is mostly, political question. It will be interesting to see what sort of line the German government takes. I mean, before the recent elections, Olaf Scholz, who was then finance minister, had raised some ideas for moving forward on completing the banking union, especially the deposit insurance. And interestingly, one of the reasons that he gave was wanting to increase the integration of the Eurozone banking market. And he was also concerned about issues connected to the profitability of German banks. And so it will be interesting, though obviously he's no longer the finance minister, to see whether Germany has a more positive approach to these kinds of issues. I think, as I mentioned, Andrea and Ria and the leadership of the SSM have some creative ideas about how to work around some of the obstacles, like intra-group agreements about how to deal with liabilities of the different national components, which might help to alleviate the concerns of national finance ministers. Also, the idea, which apparently is being pursued by non-European banks doing business in the EU, of making more use of branches rather than subsidiaries and having a pan-European structure. So it's possible that if those kinds of workarounds are pursued, it could contribute to alleviating the concerns that some of the national political actors have there. I think it's worth also mentioning, this question about whether more non-Euro area countries, member states, may join the banking union. And both Denmark and Sweden had reports about this. And what is kind of striking is that in substantive policy terms, particularly about banking supervision, they basically said, we think the SSM has been pretty successful and there would not be any substantive reasons not to join. The reasons are political. They have to do with sovereignty and possibly some concerns which you have pluses and minuses about joining the single resolution mechanism, where national money could be involved in a big way. So that's what I can say about that for now.
Sorry, Kilvar?
Yeah, thank you. I will start off with, for me, what for me makes SSM successful. I mean, having said so, I think we at SSM have a lot of work to do. I mean, we have still weak banks in the Eurozone, and we are pretty, I think, we can be more active there. At least I would be more active if I would be the head of European banking supervision. But anyway, that's just a dream. But anyway, why SSM is for me has been quite successful. Two components. First is I would say that openness and sharing the data between the supervisors. So basically, you have shared information, and then you have benchmark how to act. And second thing is decision-making mechanism. Basically, the supervisory board mechanism, where all the member NCAs are around the table, plus the independent members, and it's very good dynamics. I mean, I have been there since 2014. It's great. I mean, if you argue your case well, for example, I mean, ECB took away, it was a precedent case, license from Versobank, which was the small Estonian or Ukrainian-based Estonian credit institution with a non-resident business model, so to say. We told to ECB, guys, we should take the license away for the AML purposes because of the AML breaches, and it was total shock for ECB. I mean, the member state asked to take away license for the reasons not within the perimeter of SSM. But we were able to convince our colleagues around the supervisory board table as well. So very good decision-making mechanism. And here I'm a little bit critical to some other European agencies. Let's say maybe SRB, maybe it's too close. I mean, we are also a resolution authority. And I mean, if I want to compare, for example, my resolution plan, I mean, my small bank resolution plan with some other small bank resolution plan in Germany, say, I mean, I cannot do it via SRB. And I think it's weakness of SRB. I mean, one of the strengths of those European agencies is to share information, not only to, to make the central policy, but also share information, because then together we are stronger. Every piece of the system is stronger if you have the pool of information. And I think the SRB system is already too much kind of centralized, at least at this very juncture where we are in the European Union. Now, what comes to the EDIs, I mean, it's our hope in the Baltic states as well that the EDIs will be there, and we as a supervisor, we are of course for it, but we are not, we can't really manage the whole process. But our votes for EDIs are there. I mean, from the beginning already. So, not that we want to free ride. I mean, somebody probably has this, risk kind of understanding that somebody wants to free ride on the basis of EDIs. We don't think so. I mean, and then it's back to square one. I mean, we have to be more active in the SSM to clean up the market from the weak banks, so to say. And this is something what we have to, take our act together in Europe. I think we are too slow there in addressing this. Yeah.
Almost a conclusion, and we're almost at the hour, but I want to just take 1 or 2 minutes to address a question which has been asked by Christopher Spink and is very much in the news. So I will read his question and ask you to make very concise responses before we close. How would proposed sanctions on Russian banking system, for example, blocking Russia from SWIFT, impact EU banks with subsidiaries, branches, or assets in Russia? Kilvar.
I could answer to this question only when I would have enough data in my head. But as a policy matter, I think, and I'm describing what we are doing in Estonia. I mean, we are border country. I mean, Russia is our biggest neighbor. And in 2007, we already faced, and it was at least in known history, the first cyber attack in the world, which most probably was initiated by our neighbor, Russia. So we are preparing also for the different events, also to successfully kind of bolster ourselves from cyber attacks. What comes to the overall European view, I think it's more correct to ask from the center, because currently it's very fresh development, and I don't have the data on top of my head. Of course, I guess it will impact the European banking system, but in what exact way, I wouldn't dare to speculate here.
Rutan, any concluding thoughts about this topical issue?
I can't give you. This is really beyond my expertise. But maybe one thing I can say, which I think comes. I was led to think about some of the exchanges with Kilvar, is the question of the relationship between banking supervision and anti-money laundering supervision. And I have always been a bit puzzled that, at least for banks, why it would not make sense to integrate these more closely, because the JSTs and the on-site missions are in some respects in a good position to study the bank's internal processes and to identify possible signs of anti-money laundering. But it looks as if the EU is going to go in a quite different direction with an independent anti-money laundering authority modeled in some respects on the SSM, but then we will have this problem of coordinating, banking prudential supervision and anti-money laundering supervision of banks. So I find that to be something of a puzzle.
Note that the ECB, speaking of the center, is very supportive of the creation of the new authority. So they are clearly not asking for the job, but of course, that raises a number of trade-offs, which
if I may comment,
we won't have time to address fully here. But yes, Kilvar, you have the last word, and then we'll go.
Very brief comment. I mean, what comes to, again, the Finansinspektion of Estonia, I mean, what we saw in Danske case was that, the money, bulk majority of the money came to Danske Bank from European Union banking and also went out to European banking. But then everybody investigated Estonia and Denmark, but not the other countries from where the money came and to where the money went. So therefore, we have been supporters of this European agency addressing the AML issues. I mean, that's not only, and we see very different approaches across the countries there when it comes to AML. So hands up or thumbs up for this common, AMLA or whatever will be its name. Sorry.
And indeed, we had a session about this with Shane Berrigan, the top official of the Commission on the technical side of this proposals. That was in September with Josh Kirschenbaum as a discussant. And we'll come back to this issue of AML supervision as AMLA, the European Anti-Money Laundering Authority, takes further shape. In the meantime, I want to thank very warmly Kilvar Kessler and Jonathan Zaitzin for what I thought was a very insightful and interesting conversation on the pluses and minuses, many pluses, a couple of minuses of the SSM. Our next session will be on Thursday, February 10, on a Thursday this time at 8 a.m. Eastern US time, 2 p.m. Central European time. We'll discuss issues about emerging markets, financial stability with Tobias Adrian of the International Monetary Fund. And in the meantime, again, many thanks to our speakers today. Many thanks to all the audience for active participation, and have a great rest of your day. Thanks very much.
Thanks for inviting. Great.
Thanks a lot.